because you don't just reach an age where you can suddenly like, oh yeah, I'm buying a house now. It's when you can fucking afford it. And what I want to show you here is this is the biggest decline in real property prices in Canada in history. The housing market is collapsing so fast that developers are trying to lobby the government to change the rules on the foreign buyer ban, and obviously there is a lot of pushback against this. So Vancouver developers push for foreign buyer ban changes to spark pre-sales. I mean, it doesn't get more hilarious than that. You're seeing the housing market collapse so much that they're now trying to change the rules. And who actually says that any of these investors are going to come back and invest in Canadian real estate? Because you've got to think about the investment equation. It's still shit even if you have the foreign buyer ban removed. So why do you think these people are going to come back? Maybe they're more just pushing for those money launderers to come back, and maybe they're never coming back. Who knows? And then Woes posted this, which shows the difference in the size of real estate share of the economy in Canada, percentage of GDP. I think this chart is really interesting. So it goes from 2004 to 2014 to 2024 in this dark blue shading here, and you can basically see how in every single province pretty much apart from Saskatchewan, you can see that look, it has absolutely skyrocketed as a percentage of the economy, and that just goes to show the dependence. But the real one that you're looking at here, BC, well, this goes hand in hand with what you're seeing with them trying to get the foreign buyer ban removed, because the real estate industry is such a large percentage of the economy, the biggest share in Canada at nearly 20% of the economy. Isn't that just fucking insane?
Our economy is very strong.
Nearly 20% of BC's economy is housing, and it could probably be even more than that if you include all the indirect industries that are affected by real estate and all the businesses that are secondary and independent contractors that are also part of that real estate industry, even though technically they're not. And then we go to Shazzy. The condo carnage is continuing, and that's why the developers are lobbying to get that foreign buyer ban removed in BC. But this is in Toronto. $160,000 evaporated, this one-bedroom condo. It was bought for $810,000 in 2022. I mean, how are people paying these insane prices? It doesn't make any sense. Yeah, they paid that in 2022, but now they're obviously seeing what came to fruition after buying that, which is a massive loss of $160,000 because it just sold for $650,000. That's a 20% loss in 3 years. And you know, as Shazzy is pointing out, this is like a starter condo. So you know, where are those first-time home buyers? Do you remember? I think it was back in 2020 or 2021. They were saying that, oh my God, the housing market is going to boom now because all these people are coming of age to basically buy a home. And it's complete bollocks, because you don't just reach an age where you can suddenly like, oh yeah, I'm buying a house now. It's when you can afford it, especially in places like Canada where affordability has been eroded so much. So it's absolutely insane. And now I just want to show you this real quick. So this is real residential prices across Canada for property, and what I want to show you here is this is the biggest decline in real property prices in Canada in history. So if you look at 2022 to who knows when, at this point we're down 23.5% on the index. 1 year in 2008, 2009, that was minus 10%. 9 years, 1989 to 1998, that was minus 21%. And then 8 years, 1976 to 84, minus 22%. And obviously you had a lot of inflation in that period of time as well, which is once again kind of proving that case that inflation is actually terrible for home prices. And the reason is because people are extremely leveraged when it comes to home prices. So people kind of think in terms of cash, like if it was a cash market, then prices should be rising with inflation. But when people are as leveraged as they are, they're obviously affected by interest rate variances. And obviously they're affected if the economy is highly leveraged as well, which it is, because that increases the unemployment rate. And you can't just create jobs by lowering interest rates, as we're seeing the complete opposite of that with what has happened with the Bank of Canada.
It'll be painful.
So again, that just kind of shows what's going on. And I laughed at this. A Canadian recession seems certain. Not anymore. We're close to the point of maximum distress over US President Donald Trump's assault on the Canadian economy. We stand to lose more jobs than we already have in the sectors that Trump has most heavily pummeled: auto, steel, and aluminum. But between them, Ottawa and the province will keep laid off workers whole, as the Fed did with their pandemic relief checks. And that was such a good thing that fucking happened, wasn't it? When they released all those stimulus checks, when they said, you know what, you don't have to pay your bills anymore, just put those on pause and then just go and spend all your money on Amazon and everything like that. It's just funny how lay people don't understand that when the government comes in and creates money, whether it's stimulus checks or a deficit, that they're adding inflation to the economy. And if they're doing it through the middle class and the poorer classes, then that's likely going to create even more inflation, because the velocity of the money, the speed in which that money is going through the economy, is much higher with those classes compared to the richer classes, who generally go to assets like the stock market or real estate. But in the case of the shit show in Canada, they're mostly going to the stock market right now. And then that doesn't really impact inflation as much. And couple that with this, Ontario mortgage delinquencies on the rise, and experts warn that they could climb higher. I mean, that is going to definitely happen. And we've just seen this month over month just continue to happen. And there's also an unemployment report coming out on Friday. We'll see how doctored and messed up that is. But yeah, more people are losing homes in Ontario. The delinquency rates are going up. They're still low in terms of the actual rates, although we don't pay much attention to those. As I've shown in previous videos, the accuracy of those is very, very low. But what I really want to highlight from this article is what it says about 1990. So roughly 25 out of every 1,000 mortgages are in arrears in 2005, compared with the early 1990s, when amid soaring interest rates, as many as 65 of every 1,000 borrowers were in default. So think about that, guys. The math is actually pretty easy on that. So you know it's just going to be 6.5% that you're looking at in terms of a default rate. If you go over to the percentage calculator and plumb that in, it's exactly what you get. You get 6.5%, as we've got right here. You can see it. So basically what's happening there, what that is showing us is that default rates got to 6.5%. So now we want to know, what were the numbers coming from the Canadian Bankers Association at that time? And if you look at this, guys, you'll notice something. The delinquency rate, it barely changes. You know, it did go up in the 1990s, but it peaked out at around 0.64% of mortgages in default. So not 6.5%, 0.64%. So that kind of shows you that the delinquency rate at the CBA is not always an accurate representation. And in fact, I would argue it's complete BS. That number barely ever changes, and it's not really accurate at all. And where are they sourcing that data from, might you ask? It's the banksters. But it shows you a trend of what's happening, and you can see that basically in 2023 you're at 0.08%, then you went to 0.14%, and now you're at 0.23%. While the rate might not be terribly bad by historical standards, mortgage delinquencies haven't been that high in Toronto since early 2013, and Ontario hasn't seen levels this high since 2016, which obviously weren't great times for the economy either. Equifax is reporting that more than 11,000 mortgages in Ontario recorded a missed payment in the last quarter of 2024. The firm warned that Ontarios are struggling with their mortgages, and that mortgage holders are struggling with other forms of debt as well. So that's not looking very good, and probably explains why the housing market is crashing so hard in Ontario. And then you've got thousands line up for C&E job fair amid high youth unemployment unemployment rates, but get this is really shocking. The C&E says it has around 54,000 applications that it's had come in, and they only have around 5,000 positions. So that means that only 1 in 10 of those people who are going to that are likely going to end up with a job. So, I mean, that just goes to show how bad the job market is. Loads of people lining up for these job fairs, but only 1 in 10 is likely to even get a job if they're lucky. And, you know, all these new immigrants that were took into Canada, they were all offered things like this. No monthly fee banking for your first year. But this is the crazy thing. Up to a $15,000 credit limit, no credit history required. You've got to think about how many people who are new to Canada who took the big banks up on this offer and are never going to pay that debt and are probably going to leave, because you've got 1 million people who are likely going to be leaving this year. We're definitely on track for that. So how many of those people are going to have existing debts that they're not going to pay back? And then if you look at the unemployment rate in Ontario, Windsor is at 9.6%, but Toronto is still at 9%. And we've got that unemployment report that is coming on Friday. Right now, unemployment rate is 6.9%, and it's been going up and up. So obviously, you know that Canada is in a recession. I don't even know whether you'll even hear from the mainstream media that Canada is in a recession anymore, because the figures are so doctored and broken now that Western countries may never really enter these technical recessions, because the government can just increase waste and deficits in order to prop the numbers up. And they are the ones that are creating the numbers. So can they be really trusted? I don't know. I'll let you be the judge of that. Anyway, if you've enjoyed this video, I'd highly recommend you check out this video. And then if you're looking for a VPN to protect your privacy, get the fastest VPN, the VPN that I use and also help out the channel. That's ExpressVPN. Link in the description below. And I will see you in the next one. Take care.